Hey traders, this is Blake Morrow with Traders Summit, and you are listening to Mr. Jim Welsh and from Macro Tides, and we're here again talking about, well, it's been an exciting week, Jim. We've got the FOMC this week, and I got to ask you, has it changed your opinion on what Powell's going to do, moving forward in the next couple of months? As far as it seemed like he was extremely dovish, more dovish than the market was expecting. What are your thoughts?
Well, when you and I spoke last Friday, the outlook was an expectation was that Powell would use the FOMC meeting as well as the press conference to kind of nudge the ball down the field in terms of the tapering discussion. And, a few months ago, they weren't even talking about. And my point was that, yeah, they're going to acknowledge that they are talking about it, but no schedule will be actually set. And I think that's really precisely what Powell said. The other point would be is we're waiting for the labor market to improve. And so the difference, and this is an important difference, in the old days, the Fed would anticipate based on their economic analysis of what was about to happen and respond accordingly. That changed last August, because they said, you know what, unemployment got to really low levels in 2018 and 19, but inflation didn't really take off. So we're now going to wait for that to happen. And so how it applies now is that they want to see the employment numbers, which I think everybody believes when we get out to September and October, we're going to see a big increase. But the Fed is like, hey, prove it. All right, that's going to happen. And that is going to nudge this whole process further down the field. So I think as they get out into October and November, that is the time frame, I think, when they see 2 or 3 good job numbers, they're going to tee it up at that point in time. And I still think the odds are it'll start in January of next year, the actual tapering.
Okay, and and that was that's like what the market was looking for is, hey, do we start pricing in? Do we keep it priced in for December? Do we move it out to January? And you bring up a couple of things. Next week we're going to have our jobs report, obviously, and for July. But today we saw some of the PCE data come in a little weaker. But you're talking about inflation, and for so many years, Jim, and we've been waiting for this. I mean, we've really had no inflation for the last, I don't know how many years. So you could go back at least a decade. Yeah. So what makes you think that this inflation is going to be more sticky this time around?
Well, the one thing I'll note is last December, the FOMC members and their projections for PCE, core PCE inflation for 2021 was 1.8%. We're more than double that basically at this point in time. So they were off only by 100% in terms of their estimate. So I guess in terms of an academic or, economist, that's not bad. Okay, so there's a number of components, obviously, that go into core inflation. And what's been driving this inflation surge, Blake, is, supply chain bottlenecks and, computer chip inventories being so low, and now, we can't even make cars because we make half of them and they're sitting out on the lot, and so waiting for the chip to show up. So if you look at it, in April, the lead time on computer chips was 16 weeks. It's now up to 20 weeks. It's getting worse. If you look at supply chain issues in terms of transportation and getting things from point A to point B on time, that's deteriorating. And more importantly, if the supply chain transportation system was improving, shipping rates would be coming down. Instead, last week, they reached their highest level, and they're up 300 to 400% from where they were pre-COVID. So if you look at some of the symptoms of supply chain issues, they're not getting any better. So what that to me suggests is we're going to see inflation hold up longer because these supply chain bottlenecks are going to persist. And we're about to go into the Christmas season of when a lot of stuff gets shipped. So it's on the store shelves when we show up in November and December to buy our holiday presents.
Jim, that you bring up a lot of great topics and a lot of points here that I want to talk about a little bit. And I know we don't want to make this too long of a call for everybody on here. We don't want to give away all your thoughts, because to find out more about what you do, make sure you go to
Right.
macrotides.com and, for Jim, and you can click in the link below in the description and get to Jim directly. But I've got to say, when I was listening to Powell, he talked about, transitory inflation, and his definition of transitory was the surge of inflationary pressures is only transitory, but prices might be sticky. And I don't think the consumer really understands the difference between the two. So the consumer sees prices have gone up, and once they feel that prices aren't coming down, is that going to really start to impact consumer spending moving forward?
As long as people have enough money in their pocket, they're going to keep spending. All right. So the government has given a lot of money to a lot of people, whether they were working or not working. So I don't think in the short run, Blake, that's going to diminish spending for a while. If we get out into next year, we'll see. But the thing about the transitory comment is, he's kind of altered a little bit, because he said, well, if you really think used car prices are going to not come down, or that this shortage is going to last a multiple years, well, that's what we believe. It's not going to last, many years. Well, wait a second. That's a huge leap from transitory. So I think the Fed is in a box. And they keep, they had Delta to use as an excuse not to do anything. They want to wait for the labor market to improve. Sure. But those things are all going to happen. And it's just a question of when they're going to have to make the official announcement. Between now and then, they're trying to prepare markets so that there isn't a taper tantrum too. I think that's their primary goal. But, I'll mention one other thing. Powell and others on CNBC all the time talk about lumber prices. They went from 400 to 1700. Now they're under 600. And this assumption is, well, that's how all the prices are. But if you look at industrial metals, copper, zinc, and lead, and they're making higher highs. Okay. So again, people have this perception, oh yeah, lumber's the poster child of, transitory inflation. But sorry, you're wrong. I mean, grains have come off a little bit, but the majority of commodities have not really come off very much. And that's another aspect in terms of, to your point, companies experiencing cost increases, and more of them are passing them along. And so unless those raw material prices really come down, we're going to see more of that. And the other thing that they're doing in the grocery stores to kind of hide from you and I and everyone else, they're shrinking the packaging. Yeah. So if I shrink the packaging by 6 or 8%, but I keep my price the same, the consumer thinks, oh, okay, that hasn't gone up. Yeah, it kind of has. You just don't realize that you're going to, need another box of whatever you're consuming sooner because the box is smaller.
And I was going to say that, the chances of that type of behavior reversing, it's not going to happen.
Yeah. No, the thing is, at some point in time, supply and demand on a lot of raw materials and stuff is going to get back into balance. There will be competition. Companies will start lowering prices, to take market share from somebody else. Sure. That will and is going to happen. But when wages go up, and we're seeing big increases in wages abroad, a lot of sectors within the labor market, those don't get rolled back. So that is to your point that, you get this rate of change peaks and starts to come down, but the absolute level flatlines at a higher plateau. And that's exactly, I think, is what's going to happen to core CPI. I think it's going to continue to hold well above 3% for the next 6 months for a number of reasons that I discuss also in the August letter. And that is where I think is going to be the sticky point for the Fed. Is core inflation keeps holding at a very high level. And once the job market shows the improvement that they're looking for, I think they've run out of excuses. And that's going to happen, I think, by the time we get to October.
Okay, so then I'm going to pass it on to you for one last question, because the last time we spoke, which was just last week, you said the dollar was going to come down and then the dollar is going to eventually make a big rally. Well, we did see that. We saw the dollar come down, the euro rally back to 119. You're seeing it come off again here as we head into the weekend and the dollar starting to strengthen. Was that it for the dollar? Does the dollar go straight up from here, or how do you position for everything that we talked about in the FX market?
Well, I think you have to look at it as if it takes out the highs, the recent highs, that's probably a signal that the next leg higher is happening. My own view is I think we had a decline just under 92 in the dollar index. You're getting a bounce. I think that we're going to see another leg down in the dollar to take it down to 91.50 and maybe 91.20 as a more likely level for this pullback after the initial leg higher before the dollar begins the next advance. But partly why I think it's going to happen, Blake, is the perception of Fed policy globally is, people are still believing about transitory and what Powell's saying. I think that's going to shift. And as people really perceive that, wait a second, the Fed is running out of runway here, that's going to be supportive of the dollar index.
Interesting, Jim. Well, it's always a pleasure to talk to you. And I'm glad that we're consistently talking a little bit more about these macro ideas. But to find out more about what Jim is thinking and his thoughts, make sure you subscribe to Macro Tides and get the link from us just in the description below. Jim, you're always wonderful. I hope you have a great weekend, and it's always nice to talk to you.
Hey, thanks so much, Blake. Enjoy talking to you as well. Have a great weekend.
All right, thanks.